Okay, I think I'm live. I think I'm live, everyone. Just want to make sure everything's going good. Okay, I think the sound is on, the audio is on. Excellent. All right, just want to make sure a few things are in order here before I continue. Welcome to my Bitcoin Live weekly chart analysis. As you can see, the thumbnail, pump coming, pump coming. Sounds kind of gross when you say it that, if you keep repeating pump coming, pump coming. Um, but everybody wants to know, is the pump coming? And I can tell you right now, it's probably not what you think, but yes, right now it is, but it's not what you think, okay? I'll talk a little bit more about it, just stick around. Hold on here, I'm checking a few more things before I get into the chart analysis. My thoughts and opinion for the week of what's going on. So hold on. Okay, hold on. Oh, I gotta change my thumbnail to this. Sorry about that. Let's see if I can do that right now before we continue. I don't want to confuse people. I used an old thumbnail here. Sorry if I'm so disorganized. I can be disorganized. And oh, where is it? Oh, I didn't. Looks like I didn't change it. No, I think I did change it. I just don't know where it is. Anyways, I'll give it some time for people to come in if they come in. Sometimes they don't. There it is. All right, there we go. There we go. I changed the thumbnail so it matches. All right. Let me refresh it, see if it will refresh, and it is. There it is. Excellent. Okay. So there you go. Tuesday, March 28th. I know it's a Tuesday. Kind of forgot, or I should say I was a little busy on Monday to do the chart analysis, but I'll go ahead and I will do a chart analysis for the price of Bitcoin today. All right, today. All right, so let me, before we continue on this, if you're so kind enough, if you have some Bitcoin, let me transition. If you have any Bitcoin and you like what I do on my live streams here, you like to check it out, and you like my opinions, you like my insights, feel free to donate some Bitcoin. I think this is a Beck32 Addy, Beck32 address. So go ahead and check it out. If you have a Bitcoin wallet, go ahead and scan it. If you have an Explorer, go ahead and scan it, or put in the number up there. I don't know if it's big enough to see, but it should be. It's also in the description. Feel free to donate. Anyways, so much for that. Let's get into the charts now. All right, charts. This is what I usually use. I've been using Fibonacci fans. This is Bitcoin.io. I think or BitcoinWisdom.io. I think the original Bitcoin Wisdom stopped, and this is what replaced it, which is somewhat similar, a little different, but it's good enough. There are other websites that you can use. I don't particularly use those other websites because they just get a little too complicated. I personally like to keep my charts simple and easy. Not only that, I don't really save like all my things, all my lines. It can get too cluttered. So, excuse me. So the thing you're probably wondering or asking yourself, is the pump coming, right? Is the pump coming? Pump coming. And the answer is yes. Yes, the pump is coming, but not in the way you think, all right? And I'll try to explain it best as possible, as much as I can. All right, let me get to the chart here. Let's get rid of all this line. First thing that I always do is I try to clear up all this stuff. Let's clear it up. Let's see, tools, let's delete all this. And I just go over how I came up with some of my conclusions based on just simple drawing lines and looking at these two moving averages. One is a 30 period. I'm on a weekly, so it would be 30 weeks. The other one, the lighter color, the orange is 30 period. The more whitish or light blue color right here, that is the 10 period average, or 10 weeks, because I'm on a weekly. And those are the two, let me see, the moving average and the candlestick themselves, the way the price moved within a week, are probably the only indicators I use other than lines, Fibonacci lines or Fibonacci fan lines. Other than that, that's the only thing I pretty much use. And I like to keep it simple, mainly because um, if you make it too complicated, you'll never make a trade. You'll never make a decision. So I like to keep it simple. All right, so that's the line that I come up with. These 2 points, the all-time high, and then this point right here. And let's see, the high of that was 48,192. Those are the 2 points that I use. And you can see there, I'm making a trend line, at least the top trend line, which broke out right about here in the week of October 10th. October 10th, it broke out, came down, touched it again to 15,487, goes sideways, and now we're seeing I guess you would call it a golden cross, right? If it went down the other way, you call this the death cross. And you can see from where it started right around here, which would be January 3rd of 2023, so almost over a year ago, you've seen this death cross happen, and it's never crossed over again until February 3rd, which is not that long ago in terms of a weekly chart. That was 1, 2, 3, 4, 5, 6, 7 weeks. And I think after 7 weeks of letting the candlestick go by, that definitely this is a confirmation, a definite confirmation that the two averages have crossed over, which is the first signal, the beginning of at least the beginning of a bull market. Now, whether it's a confirmed bull market, you'll never know until it actually happens or after it happens. But this is an indication of a very good sign for people who are very bullish. Now, is the pump coming? Yes, the pump is coming. The pump will always be coming when you have the beginning of a uptrending cycle. You got the two averages crossing over, and you have the price itself going higher, making higher highs than the previous highs. So, yes, you have a pump. The pump is coming. And not only that, they will come in waves. After the first pump and the second pump and the third pump, it'll die down a little bit and then it'll pump again. And then you'll have waves within waves. So as the price starts going up higher, it'll start coming down, and then you zoom out and you take a larger time frame of it, you'll see all these little waves made up a bigger wave, and you'll have these bigger waves start happening within the little, or the little waves come in within the big waves. So you have a wave within a wave within a wave. And now that I think it's safe to say that we're kind of in a start of an uptrending cycle, that yes, there will be pumping. The pump will come, it'll come in cycles. If you want to catch the pump at a good price, what you usually want to do is after the most recent pump, you want to see how the price reacts. If it starts going down, you can start buying on the dip, and then when the next pump comes in, you're in a better position. You're never going to get a lower price after the pump. So if you're waiting for that wonderful price that was 4 weeks ago, 7 weeks ago, I think your opportunity is gone unless you're able to catch the bigger waves that come in within the smaller waves, or the smaller waves within the bigger waves. So those will not be happening for a long time. So you have to be very, very patient. And sometimes they don't happen until you aren't paying attention, or you don't put in your orders to buy at the lower price. That's just the way it goes sometimes. And even if it did hit your price that you want, oftentimes what happens on the exchanges, Coinbase, Bitfinex, what other exchanges are out there? Um, I don't know. There's a lot. Oh, here it is. Where'd it go? I just had it. Okay, there it is. All right, Bitfinex, Bitthumb, Binance, Bitstamp, BitMix, Kraken, Exmo, Coinbase Pro, whatever all this other OKX. I mean, whatever these exchanges are. I mean, there's a whole bunch. There's a slew of them. Um, whatever exchanges you go, it doesn't really matter, because when you put in your order and the price violently goes down, what may happen is your your trade may never get executed because of the volatility. Or what might happen often in Coinbase is the price is so volatile that they stop, or they prevent you from making any purchases or any trades. So you essentially get locked out and you miss on the chance of getting it at a really good price. And that's very common. And so trying to buy at a time where it's very volatile, and the spread between the buy and the ask, the buy and the sell price increases, it becomes harder to fulfill your trade. So even if you happen to make the right call and put in a buy order, put in that order that you want to buy, it may not get executed because the price is so volatile, and the spread from the ask and the buy price, ask and sell price, is so great that you may not be able to fulfill your order. So that's the issue. Same thing when you're trying to sell. I'm talking about when you're buying on the dip, um, but same thing when the price is going up. There is volatility. There is also a huge gap, a huge spread between the buy and the ask and buy, the ask and sell price, that your order may not be able to get fulfilled. So even though you put in the right trade, you put in the order, it's best to make a market order. With market order meaning that you're buying whatever the price is right now between the two ask and sell price. Between those two prices, that's what you're buying right now. And it's better to have a trade in hand versus a trade that you have set up to get triggered, but because of the volatility and the spread, it never gets fulfilled. And that happens quite often. Or sometimes the exchanges will just shut down, conveniently, usually during a crash. But um, when the price is going up, you're going to find all of a sudden it's hard to cash out, it's hard to sell your coins. So that happens a lot. So the best time to trade is when there's low volatility because you'll get your orders fulfilled. You can get a consistent price because the spread between the ask and buy price is very tight. But you're not going to get like the lowest, the best price, unfortunately. Often not. So let's take a look at the Fibonacci fans now. And this is how I'm getting the Fibonacci fans, just doing this. And let's react to the price itself and the way it moved. So I'm thinking, just by looking at this, the reason why it stopped right here at this particular price at 28,000, 28,000, 29,000, mainly due to the fact I think it stopped right around here at this support level from the past. Often what you find is that support levels become resistance, support lines become resistance lines, and resistance lines become support lines, vice versa as the price moves. Why does it work that way? I don't know. Do people trade this way? I'm not sure, but it just happens to just be that way. Is it coincidence? It happens more often than not to be coincidence. So just like everything else, I think there is some psychological effect. A lot of people believe in these chart analysis. I guess if you believe in it so much and you believe your analysis of it and you can justify it by making lines and following averages and looking at the candlestick itself, it makes sense. It makes sense. But to be honest, there's really no guarantee. No guarantee whatsoever. You're essentially making an educated guess. A lot of this is psychological. Is there any technical analysis as on the chart itself? There is. I think there is, but it's more of an art than a science, in my opinion. So I think that's why you see the price stopping at this price area, is because there is this three areas right here where the lines kind of meet up, and that became a resistance to this current price right here to the right. So right here to the right. And then I won't know if that is the case until I get a confirmation of the next price action, the next candlesticks. And that won't happen for another 2 to 3 weeks, maybe even 5 weeks, or even longer. The problem with using a longer time frame or doing any chart analysis is nothing is confirmed until after the fact. But after the fact, what's it going to help you? You can't do the trade. You can't go back in time and make your trade. So I think that's where experience and the art of reading chart analysis comes in, and how long you've been in the game to see the different cycles of the price action. So now that we're looking at the present, let's look into the future and see possibilities. I think it's going to go sideways. The red candlestick that you're seeing is the new formed candlestick. Never make a judgment or trade based on the most recent candlestick because it's not finished. It is still going. All right, it can change from being red to all of a sudden being green, and vice versa. The green candlestick can all of a sudden change to a red candlestick. Red meaning that it went down. So I think if you're play the game right and you're patient enough and you understand the cycles, you understand the fundamentals, and the fundamentals mostly come from mining, that you'll be able to make a very, very educated, all right, very, very educated trade, purchase, or sale, whichever you want to do, but you'll be more educated. And I think that sense of knowledge gives you courage that you made the right decision. And like I said, a lot of it's psychological. A lot of it can be self fulfilling because when I made, and let me just go back here. So when I made this thumbnail here, the reason I said pump coming is because when I looked at the thumbnails out there, that's all I saw was pump coming. Is the pump coming? Pump is coming. Will the pump come? Yeah, I mean, just ridiculous titles like this. And that gives me an indication of what's kind of going on because a lot of crypto trading involves social marketing, social engineering, getting people all hyped up about things to get you to buy. And so when I see titles like Pump Coming, is the pump coming? Are we in another bull market, a bull flag? These are just indications to me of what the market anticipation is, what some people are being led to believe, and then it becomes a self-fulfilling prophecy because you believe, you think that the price is going to go up, you start buying, driving up the price. And when it does, you're like, huh, I'm a genius. Until the point where the cycle changes. Right now, we're in a down cycle. We've been in a down cycle. If you look at, if you just look at the chart since the all-time high of November 8th, 2023, no, 2022, November, is it? No, November 2021, because this is 2022 right here. So November of 2021, it's been a very long downward trend. And so you fall into a sense of despair because you think the price is always going to go down, and that's the irony about it, is that it won't. Just when you think the price is going to go down and you're putting in your shorts, that's when you get hit. The price will start going up. You're working against the trade. You don't want to work against the trade. You want to work with the trade. If the price goes up, the price goes up. Of course, again, you're making an educated guess, but I do still believe by November, at least by November, there could be a great possibility of the price going up. We have a lot of there's a lot of things going on. Mining rewards happen next year, March. I believe there's a lot of anticipation for price appreciation. It leads to scarcity, and eventually, um, what's going to happen is it's going to be self-fulfilling. And when you buy into it, you're driving the price up. So plenty of time. Right now, I do think it's gonna, maybe it could possibly go up a little bit. It probably won't. It'll right up against this Fibonacci fan line, and then it'll probably go down and wait for the next point to break up, go up higher. It has to break this this horizontal line right here, horizontal line, yes. And the way you know that you're really going to be in a bull run is when it goes past above this line right here, which is 7,921, around that price. Once it breaks that, it will most likely make an all-time high. How far can it go? I don't know. I'm thinking it's going to go in the thousands myself personally, but again, I'm just guessing at that point. So if you just look at the Fibonacci fan lines, you'll see that it's going to curve, go down, break. It still has this resistance line. It's gonna probably just hit this line area for a while before it really starts to make that push upwards. And then by the time that happens, this is what I would watch out for. Look for videos with thumbnails or captions where people talk about how rich they are, how rich they've gotten. Altcoiners will come out of the woodworks talking about how they've become billionaires and they're going to buy Lambos. Usually when you hear that kind of rhetoric, it's probably you're at the top of the market, and very soon these people will not be there. My guess. So, anyways, that's it for the live stream, the Bitcoin live stream. It's not a very long live stream. It's very simple, very easy. Short-term price will go down. Longer term, yes, there will be a pump. There's always going to be a pump. The question is, how big is the pump? I think it's going to get bigger and bigger. You'll have waves come in, and within those waves will be smaller waves. So you just have to, just look at the chart and tell you and hopefully guide you into a good trade. My personal opinion is that you trade peer to peer, own your private keys, never trust an exchange, never trust a bank, you know. So just hodl, just buy and hold. Hodling is probably the simplest and easiest way to do this. You don't have to do anything. Let everyone else drive up the price. So let me put this back in here. All right, everyone. That's going to be the conclusion to my Bitcoin chart analysis, weekly Bitcoin chart analysis. There you go. I'm going to put in my QR code if you're so inclined to donate, if you like the content that I make, if you like the way I think about trading. I personally don't have skin in the game. I just do analysis. I've been around long enough to see that what's possibly coming, the cycles, and yeah, I think from this point on it will start to trend up, and we'll see what the all-time high goes, or how high the all-time high goes. It'll be very interesting. All right, everyone, thanks for watching. I will see you all later. Bye.